All right, what's up, everybody? Hope you guys are doing well. I wanted to come over and go over my entire strategy, and I'm gonna go super in depth with this. How I found the strategy, exactly what I look for every single day. I went over the strategy a couple times within my videos, but I had a couple other people messaging me and asking me certain questions, so I'd figure I'd go over all those questions that I got and explain very detailed my entire strategy and what I look for every single day. So kind of going back, when I first started out trading, I was trading options, and my boy Johnny Options, if you guys know who Johnny Options is on YouTube, on TikTok, Instagram, he trades options, and he used to trade ICT, pretty similar to what I trade, and he introduced me to liquidity sweep and fair value gaps. Now, the entire time after that, I was trading liquidity sweeps and fair value gaps. Now, there were times here and there where I would miss these setups, I would miss these beautiful longs, these beautiful shorts, because there was no retracement into the fair value gap. So I'd wait for a liquidity sweep, I'd wait for a fair value gap, and I wanna say only 2 times out of 10, anytime we saw a fair value gap, we would not retrace back into it. So I kept thinking to myself, why do I keep missing it? Eventually, I got a no trade again within my day. I sent it to my Discord. I said, guys, I'm hopping off. I didn't get my entry. I'll see you guys tomorrow. Person messaged me in it, and I wish I remember who it was, but person messaged me asking me, Daniel, why don't you use inverse fair value gaps? So I started doing a little bit more research, and I figured out how much I missed out on within my trading. I could have been so much farther ahead if I figured out inverse fair value gaps a lot sooner. Now, at this time, I knew what inverse fair value gaps were, but I just wasn't marking them out. I wasn't looking at them while we were trading. Now, this strategy has brought me a very good win rate, a very profitable win rate. I've gotten thousands of dollars within payouts. I've helped other people get payouts with this exact strategy. And I genuinely feel like this is a beautiful strategy that works. This is something that actually works, and a lot of people look over because they try to overcomplicate their entire strategy and make themselves so much harder on themselves. Well, this is a very simple and easy strategy. You don't require a lot of things. You only need 3 easy things that you need to look out for, and that's it. All right. So the first thing I want to look out for. All right. So one thing I did want to mention before we start is that this strategy happens maximum 2 times a day. Mainly the highest probability trade setup is like 15 minutes right after the market opens. So right after 9:30 Eastern time, this is where, 15 minutes, like within that 15-minute gap of like market being open, this strategy will pop up. And I can guarantee you it will pop up 90% of the time. And your job is to find this strategy, find the setup, and take it. It's a very simple strategy. I figured out how to do it, and then I kept seeing a lot more people on TikTok and Instagram starting to use it. And I'm like, okay, this just gave me more confidence within it, thinking that I can actually become a lot more profitable with inverse fair value gaps versus fair value gaps. So enough talking, let's get right into it. So at this point right here, this is market open. We are currently looking at the minute before market opens. This is exactly a minute before. We're looking at 9:29 p.m. or a.m. I should say. This is price action from London session about an hour before market opens. We got our 2 highs that we've marked out. We got our London session low and our London session high. All right. What we are doing is that we are actually looking to go bullish. It looks like we are looking to go higher and higher to take out that London session high. Now, I usually don't like taking trades right off of market open. I used to have a market open strategy where I'd take longs or shorts right at market open, like the minute before market opens, and it would rip straight to my take profit. But we haven't seen that too much recently. So I've been just sticking with this exact trade. Now, let's say this is a minute before market opens. We got this 5-minute fair value gap. Now, the way I'm looking at this right now is that we got this 5-minute fair value gap, and we have 2 very strong draws on liquidity right here. With this 5-minute fair value gap, it's a bearish fair value gap. Now, price is currently retracing back into it. What I think could possibly happen is price dumps down to this London session low. All right, and now at this point, what are we gonna do here? All right, we got 1 point of liquidity. What are we going to do? We're most likely going to reverse and target that London session high. This is exactly what I look for every single day. Now, the first thing you wanna figure out is your draw on liquidity. We're gonna move this down. First thing you want to find is your draw on liquidity. What is your draw on liquidity? London session high and London session low. The first draw on liquidity will be London session low. A lot of the times, now this is just a bullish example. I'll show you guys a bearish example with a flipped narrative. All right, we got a bullish example. We want to see price dump down after market opens. We want to see price dump down to that London session low. Okay, we got that 5 minute. We're going to respect that 5 minute right after market opens, and we're going to dump down. We're going to see something like this. Boom. All right, we got that London session low. London session low has been swept. Now this is exactly what I'm going to be looking for. Wait for it. We got that London session sweep. Now the last thing we're going to look for is a 30-second, a 1 minute, or a 2 minute inverse fair value gap. So in this case, we dumped down all the way down here, and we left a couple highs right here. Now we'll get to those highs, exactly what I do with them as well. But let's just say in our example, we're on the 1 minute time frame, and we see that we have a 1 minute fair value gap right around here. All right. And I'll show you an on-chart example of this and how it looks. And I'll show you today's example because it was a great example. All right, so we got that 1 minute fair value gap. So we got all three things so far. All right, find draw on liquidity. Currently, we took out the first draw on liquidity, which is a London session low. Now I'm gonna target the opposing liquidity. I'm gonna target the opposite liquidity. All right, I'm gonna target that London session high. This is exactly what I want to see next to be taken out, okay? We got the sweep. We got that London session low sweep right here. Okay, we got one draw on liquidity taken out. Now we are looking for a reversal, and we're going to try to catch in to that move back up. All right, so we're going to, now we got that fair value gap right here. Now we're going to wait for a candle closure above that fair value gap to completely inverse that gap, and then for us to take longs. Now I'm going to show you guys an example of this. IFEG, let's go over here, and I'll show you an example exactly what I'm talking about. Let's just say, for example, this is exactly how our chart looks over here. This is exactly how this area looks right here. We got that bearish red candle right here, and this is our fair value gap. You see, a lot of people would like for price to go up, retrace, and close in here, and then dump down, okay? That's not a problem. That's more of a continuation trade. That's not a bad idea. However, that's not what we're looking for. This is more of a continuation. We want to see a reversal. So we want to see price close above that fair value gap right here. So in this case, this is the candle that creates that inverse. Currently, before this candle, if you like close your eyes, pretend like you don't see anything after this candle. We only see this. This is still a this is still a fair value gap. It's a bearish fair value gap, but once we close that candle above, that turns that bearish fair value gap into a bullish inverse fair value gap. All right, so this is another example right here. Bearish fair value gap, I don't know why it's so blurry. Bearish fair value gap right here. Now price comes up and inverses it completely. We close above, and I want to see that closure. That is a very important thing, that I want to see a closure above that inversion, because I want to see price close above, and that will give me the confidence to say, hey, we are going to absolutely spike up and run up. Okay, here's another this is a perfect example right here. Okay, we want to see price completely close above that bullish fair value gap, that bullish inverse fair value gap, and this is the same exact thing as a bearish, same exact thing, just in an opposite direction with an opposite narrative. We're looking at a bearish one, bullish fair value gap, and it turns into a bearish inverse fair value gap after we close below that. All right, here's another. This is exactly okay. I'm done talking about this, but you get the point. All right, cool. We got that. This is exactly what I want to see. I want to see price move back up, close above. And at this point right now, I am taking these longs. I'm taking these longs after I see the candle closure above that fair value gap. Now, here's the thing. Stop loss will be moved in two different points, okay? One, and this is more based off of preference, candle closure, I would want to see either below, or I'm sorry, the stop loss placement would be either below the inverse fair value gap or below the low. Okay, so either here or here. Mainly 9 times out of 10, I'm putting my stop loss right below that inverse fair value gap. This gives enough room for price to kind of bounce around, do its thing, and then go higher up. Take profit wise. This is, once again, this is more preference. Personally, I like to size it a little bit less. I do 5 contracts on MNQ every single morning, and I target opposing liquidity. Okay, so something like this is a perfect example. Okay, so I'm either targeting an internal high, so an internal high just like this, or a session high exactly like this. All right, so another thing as well I'd like to add, I move my stop loss to break even. So I give price a little bit of time to move. Anytime price is above 50% of what my profit target is. So for example, if my profit target is 100 points, my break-even point is around 50 points. And usually it looks like something like this. If it's an internal high, if there's an internal high just like this, it is literally almost exactly 50 points away, or like 50% of where my profit target is. So something exactly like this. All right. This is exactly my trading setup every single day. So once we get above this point, my stop loss gets moved to break even, and I full take profit, and I'm done for the day. This is exactly what I'm looking at every single day. I've traded this for over a year and a half. I've been profitable with this. I've helped other people become profitable with this exact strategy. It is a very simple strategy that I promise you, and this is not financial advice, but I promise you, if you practice this for a month, you lock down your psychology, you lock down the exact trading setup that you see on the screen right here, I promise you, you will become profitable with this. If you give it 30 days of practice with back testing, forward testing, paper trading, and actually implementing it within the charts. All right, so keep this in mind. Take a screenshot, draw a picture, pause this video, whatever you want to do. Let's look at the actual charts. All right. Pretend like you did not see any of that shit right there. You don't see nothing past this point. All right, what do we got right here? We got this London session high. We got this London session low. Price is clearly closer. I'm gonna move this down. I don't know why this is so low. Price is clearly closer to London session high. All right, we also made a slight move down. We're sleeping these internal lows right here. And we want to see price push up higher to then sweep out that London session high. And then after that, like we were just talking about, I want to see an inverse fair value gap somewhere exactly very similar to something like this. I want to see this stop loss above these highs or above that fair value gap right here. And I want to see a target either, like we were talking about, either any sort of internal draw on liquidity. Market open low is also a great draw on liquidity as well, or opposing liquidity just like this. All right. Let's get rid of this and let's see exactly what happens on the chart. This is an example from today, okay? So price is moving higher. We're about to sweep London session high. Let's see, what do we do? Boop, 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 kind of chop around, bang. This is exactly what I'm looking at. Anytime I see this on my screen, I'm already like, all right, locked in. Locked the fuck in. We are locked in. We're locked and loaded. Jarvis, get my orders ready, all right? We got this fair value gap. This is exactly what I'm looking for. All right, we're gonna wait a little bit. We're gonna stay very patient. A lot of people right here would say, oh, we're making a continuation higher because price is moving up. We're going higher than these highs and our target is going to be, you know, Asia highs or this high right here or even higher. But it's like, no, we're making a reversal. This is a reversal, okay? What do we see? Boom. Let's keep going. Boom, boom, boom. Kind of chop around a little bit. All right. Boom. Just like this. What do we see? We have a inverse, we got a fair value gap, we have a bullish fair value gap that we then inverse because we created a bearish candle that closed below that fair value gap, which inversed it, and it is now a bearish inverse fair value gap. Now, what were we talking about? That we want to see a candle closure below that fair value gap. I don't care what anyone says. A lot of people will enter too fast on this. They're gonna do something like this, and then there's a wick that wicks up. See that wick right here? I'm gonna take this off. You see that wick? A lot of people will do something like this, and they get stopped out, and they're like, fuck, this doesn't work. All right, buddy. Maybe because you were a little bit too impatient, and you didn't wait for the candle closure. Wait for the candle closure. All right. Now, what are we gonna do? Let's just say we enter these shorts right here with the candle closure. My stop loss, like we talked about, was going to be right above that high, or right above that inverse fair value gap, something like this. You know, you could even go higher than that, but 100 points is crazy, bro. That's like if I'm trading with 5 contracts, that's $1,000 right there. 40 points, anything with a 25 point to 40 point stop loss is perfect. That's like my sweet spot right there. And now I have multiple points of take profits where I could look. My main draw on liquidity today was going to be this market open low, or this internal low that we have right here, or that London session low. This is the most perfect A+ setup that you could ever see on this earth right here. Okay, it is a simple, I hope you guys can see how simple this strategy is, because it is literally like you could teach a 15, 12-year-old kid to do this. If he knows basic trading, you could teach a child this strategy. It is so simple. Okay, now, what are we gonna do now? This is the most important part. You're going to want to set your stop loss to break-even points. Now, you're not gonna move it to stop loss to break-even right now because you're gonna get stopped out and you're not gonna get anywhere. Stop loss to break-even points are usually somewhere in this area. Like we were talking about, you want to wait at least half. That's like a good amount. You want to see a good amount of points before you move stop loss to break-even. If you have 100 points, let's just say we're targeting this low right here. We have a 100-point draw right here. Okay, market open low is our 100-point draw. You want to see half of that, 50 points. You want to see 50 points move stop loss to break-even. Okay, something like this. I would go this low right here. This is exactly where I had my stop loss to break even today. But in this sake, let's just keep it down here. All right. We're going to move our stop loss to break even at this point right here. Whenever price moves down below this low right here, we're going to move our stop loss to break even, and we are going to go risk free on the trade. We're going to make sure that we do not, it's either we lose, or it's either we hit stop loss at break even and we lose nothing, or we hit our full take profit. Okay. Let's go. Let's see what happens here. A little bit slow, a little bit slow. All right, boom. Stop loss is now currently at break even, and let's see what happens. Okay, that's it. This is exactly what I look for every single day. Every single morning, I look for this exact strategy. You might be asking yourself, actually, I don't know what you could be asking yourself, because this strategy is so simple. Last summer, when I figured out that if I switched to inverse fair value gaps, my win rate went up to 92% consistently within the 3 months of summer. In Q4 of 2025, my win rate was 82%. Now, as of right now in 2026, since we're only a couple months in, or we're only in February, it is currently at 72%. This is exactly what I take every single morning. I'm literally looking for this every single morning. I don't care what anyone says. This is the most easiest, most simplest strategy on earth. Let's look for another day. Yesterday was another beautiful example, and yesterday was actually a bank holiday. All right, which I still could have taken this trade on, but I just went on paper because I usually don't mess with bank holidays. All right, what do we see right away? We got the sweep. This was a little bit slow. We got the sweep. We're waiting for some sort of inverse fair value gap. We're going to want to target this, either this market open high right here or this 5-minute fair value gap. I'm going to show you the exact trade that I took yesterday morning. Kind of chopped around for a little bit. All right, what do we got? We got a couple inverse fair value gaps here. So we got this one, or a couple fair value gaps right here. Oops. We got this one right here, or we got this one right here, and let's see what price does. Let's see what price would like to do for us. All right, beautiful. The first thing that we do is we run up and we close above that fair value gap right here. So I'm going to delete this. I don't even care about this one anymore. What I care about is this fair value gap right here. I entered these longs, and now I'm going to target that internal draw on liquidity, which is going to be that 5-minute fair value gap from that dump down to London session low, or from London session, I should say. Stop loss, like we talked about, stop loss below that fair value gap. And 23 points, this is beautiful. This is my sweet spot. We're going to target 65 points. And I'm going to move my stop loss to break even at around half. All right. So we're at 65 points. We're going to want to target 32.5. So around 30 points. That's honestly, that's perfect. I wouldn't even mess with that. That's exactly where I'd put my stop loss to break even at. Let's see what happens. Keep in mind, this is a bank holiday. What else do you want me to say? What else would you like me to say to this? It was a little bit slow because it was a bank holiday, but like, come on, let's do another one. This is Friday. I made a fat bag off of this trade. I was actually on vacation in Florida and I made a fat bag off this trade. What do? Price is most likely wanting to dump towards these London session lows. We have very nice lows right here. However, we also have these data highs, all right? We also had, I can't remember what news it was, but it was a data high that we have right here from 7:30 Central Time. We had news. Let's mark out data. And then this is London session low right here. LL, beautiful, beautiful, beautiful. All right, what do we got? We got this internal 5-minute, I'm assuming this is like a 5-minute gap. Yep, 5-minute gap right here. I'm gonna wanna see price most likely retrace back into that 5-minute gap and then dump straight down to the London session lows, and let's see what happens. All right, we got that 5-minute retracement, and let's see what we do. Boom, we dump down. All right, cool. Oh my God, I didn't even get to speak. Calm down. What do we got right here? London session low sweep. We got our draws on liquidity, which is going to be, so our first draw on liquidity was at London session low. Now, our second draw on liquidity was going to be that data high. What do we got? Boom, boom, boom. What do I want to see? I want you to ask yourself, pause the video and ask yourself, what is the next thing that I want to see? Bang. Straight through. Got the closure above. Stop loss, like we talked about, below that fair value gap. 40 points, not a bad draw. Targeting that data high. You could also target the New York Open high. But data high was the most perfect entry, was the most perfect spot for me. Stop loss to break even is going to be somewhere around here. Let's see, 136 points, half of that around 65, something like that, something like this. Let's do something like this. Oops. Data high, beautiful. Let's see what happens. Oh man, what do we have here? Another beautiful trade. I love this strategy. I wish I found this sooner. Let's see what happens after that. Here's another inverse fair value gap. We're probably gonna dump down. I don't remember what happens here. Okay, this is just chop. All right, doesn't matter. Fuck that. This is exactly what you look for every single morning. This is exactly how people within my Discord are making bank. All right, now, there are obviously some days where this won't work. As you can see, we just dumped down. I was, however, looking for longs out of this. We saw that London session low dump. We got that inverse fair value gap. However, we just ended up dumping down and lower, and I wasn't able to catch anything because this is not part of my strategy. However, got another day right here. We got the London session high sweep. We got a fair value gap right here. We inverse it on a higher time frame, just dump straight through. You could look at this every single day. I guarantee you, if you practice this, if you look through, you will figure it out. It is such a simple strategy. Now, another thing too, I did mention in the beginning of this video, this happens on the 30-second time frame as well. It's not always going to be the 1 minute or the 2 minute. The 30-second is also a great, beautiful spot for you to catch these entries. I don't pay for the 30-second time frame on TradingView. I use it on TopStepX. There's really no need for it if I already got it for free. Right here on the 30-second time frame, we have another fair value gap right here. Let's just pretend it's something like this. All right, close above, run straight up, targeting the London session high. You could have even targeted the previous day high, which was right above here too. I can go on and on with this. It's just such a simple thing. I'm not going to go on and on with it, but if you guys have any questions, if you guys need a little bit more help, please leave it in the comments. Let me know what you guys think of the strategy. If you do use it, let me know how it's going for you. Yeah, hope you guys have enjoyed this and learned something new. Hope you guys have a good rest of your day. Peace out.